Hello students, welcome you all to RSD Academy. Today we have a topic on stock. As you can see from the board, the topic that I have chosen is overvaluation and undervaluation of both opening and closing stock. Now students, there is a query. Sir, what is the effect of overvaluation and undervaluation of stock on our profit? Today we will be understanding that point. Students, as you all know, stock is valued at cost or market price, whichever is lower. If there is any incorrect valuation of this, it will either lead to overvaluation or undervaluation. I will explain to you today what is the effect of such overvaluation and undervaluation on the gross profit of the company. I hope you all are aware of a trading account. Debit side, credit side. Opening stock is posted on the debit side of the trading account. Students, you know that gross profit is the balance of credit side minus debit side of the trading account. So that means whatever will be posted on the debit side will lead to decreased gross profit because credit side minus debit side. Suppose there is an overvaluation of opening stock. My opening stock should have been valued at rupees 100. It is currently incorrectly valued at rupees 105. That means my 5 rupees valuation over and above my original valuation is incorrect. This will ultimately lead to decreased profit. My gross profit will be reduced by rupees 5. Why? Because there is an overvaluation of opening stock. Similarly, if my opening stock is undervalued and it is undervalued by rupees 5 and it is valued at rupees 95 other than rupees 100, this 5 rupees reduction in the opening stock will ultimately lead to increased gross profit, and this increased profit by rupees 5 is an incorrect measurement of profit. This gross profit is incorrectly calculated because my opening stock is undervalued by rupees 5. So if someone who sees this gross profit and understands that, okay, fine, I have an increased gross profit this year. No, this gross profit is not because of your better operation. This gross profit is because you have incorrectly valued your opening stock. Incorrectly valued, that means you have undervalued your opening stock. Now, similarly, if I come to closing stock. If my closing stock is overvalued by rupees 5, that means it should have been valued at rupees 100, it is valued at 105. This 105, this 5 rupees additional, overvalued 5 rupees, this will ultimately lead to increased gross profit of rupees 5. So as you can see, my increased gross profit is not because of my business running effectively and efficiently. It is due to the incorrect valuation of my closing stock. Similarly, if my closing stock is undervalued by rupees 5, that means it is valued at 95, this will ultimately lead to reduced gross profit. So my gross profit is ultimately getting affected both by overvaluation and undervaluation of opening or closing stock. If there is an overvaluation and undervaluation of opening stock, it will have an inverse effect on the gross profit. And if there is overvaluation and undervaluation of closing stock, it will have a direct effect on the gross profit. So students, always remember, if the stock is incorrectly valued, it will have an impact on the gross profit. Not only that, if my closing stock is incorrectly valued, this will become my opening stock in the subsequent year, which will ultimately lead to incorrect results in the coming years also, until and unless it is corrected. So it is very, very important to correctly value your closing stock. It should not be overvalued, it should not be undervalued. I hope you've understood this small explanation of overvaluation and undervaluation. In case you have any query, you do post your comments in the comment section below. Like, subscribe the channel and share. You have the phone number given below in the video. So if you want to get in touch with us, you can definitely get in touch with us. If you want any other topic to be explained, we are definitely there with you. Thank you, students. Have a great day.